Welcome back to the Daily Crypto Deep Dive. Today, we are looking at one of the most emotional, controversial, misunderstood, and fiercely defended assets in the entire crypto market, XRP. Because XRP is not just another coin on a price chart. It is not just another altcoin that had a big rally, fell back, and waited for the next cycle. XRP has become something much bigger than that. It has become a movement. It has built one of the loudest communities in crypto. It has survived one of the most important lawsuits in the history of digital assets. It has been called the future of cross-border payments by its believers, dismissed as overhyped by its critics, and ignored by parts of the wider crypto industry for years. And yet, after all of that, XRP is still here, still sitting near the top of the crypto market, still pulling in ETF attention, still creating arguments every single day, and still making people ask the same question. Is XRP massively undervalued, or has the market already priced in too much of the dream? At the time of recording, XRP is trading around the $1.30 to $1.40 area, while its old all-time high still sits around $3.65. That means XRP remains more than 60% below the peak it hit during the 2017 to 2018 retail mania. And that is the whole contradiction at the heart of this episode. XRP was pushed to its all-time high by retail belief, online momentum, and the early dream that banks might one day use this technology at scale. But now, in 2026, XRP has far more institutional infrastructure around it, more legal clarity than it had during the SEC lawsuit years, and actual XRP exchange-traded products attracting money. And yet it still has not reclaimed that old high. So today we are asking three questions. First, how did XRP get to where it is now? Second, why is the XRP fanbase so fanatical? And third, where could XRP realistically be 5 years from now? Just before we continue, this episode is brought to you by Kraken, our official exchange partner. If you want a straightforward way to buy, sell, and explore crypto, Kraken is well worth a look. It's not financial advice, but if you want to check out the platform, use our link in the description. And we are also sticking with the 20 XRP giveaway, so if you want to enter, make sure you follow the show, leave a rating if you can, and check the description for the Kraken link. Not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payword Interactive. View legal disclosures at kraken.com. To understand XRP, you have to go back to what made it different in the first place. Bitcoin was the rebellion against the banks. Ethereum was the programmable blockchain for builders. Solana became the fast chain for high-speed applications. But XRP was always sold to the market as something else entirely. XRP was tied to the idea of modernizing global payments. Faster settlement, cheaper transfers, cross-border liquidity. A bridge asset for moving value around the world without relying on slow, expensive, outdated rails. That story was incredibly powerful for retail investors because it was easy to understand. You did not need to understand complex smart contracts or decentralized finance mechanics. The pitch was simple. Banks move trillions. Global payments are slow. XRP could help fix that. Whether that story was oversimplified or not, it was one of the clearest narratives in crypto. And that clarity is one reason XRP went absolutely vertical in the 2017 cycle. Retail investors were not buying XRP because of ETFs, regulated funds, or professional allocation models. They were buying because the story felt massive. They saw a coin that was still relatively cheap per unit compared with Bitcoin. They saw bank partnership headlines. They saw Ripple being discussed alongside traditional finance. And they thought, if this thing even captures a small slice of global payments, the upside could be enormous. That is how retail thinks. Retail does not always start with market cap, token supply, or valuation models. Retail often starts with the emotional version of the trade. What if I am early? XRP was perfect for that. It had a low unit price, a huge narrative, and a community that kept repeating the same message until it became part of crypto culture. That is why the XRP Army became so powerful. It was not just a group of people holding a token. It was a group of people who believed they had seen the future before the rest of the market. And once a community believes that, it becomes extremely difficult to shake them out. Every criticism becomes confirmation that outsiders do not understand. Every price dip becomes manipulation. Every legal setback becomes proof that powerful forces are scared. Every new partnership becomes evidence that the thesis is playing out. This is not unique to XRP, but XRP took it to another level because its story sits right on the line between crypto and traditional finance. XRP holders did not just think they were betting on a blockchain. They thought they were betting on the future plumbing of money. Then came the SEC lawsuit, and that changed everything. In December 2020, the U.S. Securities and Exchange Commission sued Ripple over alleged unregistered securities sales involving XRP. For many assets, that kind of lawsuit could have destroyed the community. But with XRP, it had the opposite effect. It hardened the fan base. It turned holders into campaigners. It gave the XRP Army a villain, a cause, and a legal battlefield. The case dragged on for years, and it became one of the defining regulatory fights in crypto. Eventually, the case ended with Ripple paying a $125 million fine, while Judge Annalisa Torres's ruling maintained a crucial distinction. XRP sales on public exchanges were treated differently from Ripple's institutional sales. That distinction became central to how XRP supporters framed the result, not as a perfect victory, but as proof that the token itself had not been wiped out by the legal system. This is why the XRP fanbase is so fanatical. They feel like they survived something that could have killed the asset. They watched XRP get delisted from platforms, mocked by parts of the crypto industry, left out of conversations, and trapped under a legal cloud while Bitcoin and Ethereum gained institutional legitimacy. That creates resentment, but it also creates loyalty. If someone held through the lawsuit, through the uncertainty, through the market crashes, through the jokes, through the years of waiting, they are not going to suddenly become neutral when an ETF launches or when institutional inflows appear. They are going to see it as vindication. They are going to say, "We were early, we were right, and now Wall Street is finally catching up." But this is where the story becomes complicated. Because if XRP now has more legal clarity, more institutional products, and more professional interest, why is it still below the old all-time high? That is the question that makes this deep dive interesting. The answer is that institutional adoption and retail mania are not the same thing. Retail mania can move a token violently in a short period because it is emotional, reflexive, and social. People see the price moving, they tell their friends, influencers amplify it, fear of missing out builds, and the chart goes almost vertical. Institutions move differently. They allocate, they model, they rebalance, they manage risk. They do not usually pile in all at once because a community is screaming on social media. So ETF inflows may be structurally bullish, but they do not automatically recreate a 2017-style blow-off top. That is exactly what we are seeing now. XRP spot ETF products have reportedly pulled in strong April inflows, making it one of the better ETF stories in crypto this month and reversing some of the weakness from earlier in the year. That is clearly positive. It shows there is real demand through regulated products. It shows XRP is not just being held by retail diehards on exchanges. But ETF inflows do not automatically send a large-cap asset back to all-time highs overnight. They help the story, they support the floor, they improve legitimacy. But they are not the same as a full market-wide retail stampede. The bullish analyst argument is that XRP is entering a completely new phase. Bitwise CIO Matt Hugin has argued that XRP ETF demand shows there is demand for unique assets with unique return profiles in crypto, and he has framed XRP as something investors may use alongside Bitcoin and Ethereum exposure, rather than instead of them. That matters because it changes XRP's identity. It is no longer just the coin that retail thinks banks might use one day. It becomes part of a broader crypto allocation conversation. JP Morgan has also reportedly forecast that XRP ETFs could attract several $billion of first-year inflows if broader conditions support demand. That is the bullish institutional case. XRP does not need to replace Bitcoin. It needs to become a recognized, regulated, liquid alternative crypto exposure inside professional portfolios. But the bearish case cannot be ignored. The bears are not just saying, "I don't like XRP." The more serious bearish argument is that Ripple's corporate progress does not automatically equal XRP token demand. Analysts looking at XRP's chart and on-chain activity have pointed to weak technical structure, lower market activity, and the risk that XRP could fall back toward the $1 area if key support fails. That is the technical bear case. ETF headlines may sound bullish, but the chart still has to prove that buyers are strong enough to break resistance. There is also a deeper utility question. XRP believers talk about payments, banks, liquidity, settlement, tokenization, and institutional finance. But critics ask a simple question. Where is the scale showing up clearly in XRP ledger activity? That is where the debate becomes sharper. Ripple can make progress as a company. XRP can gain institutional products. The XRP community can remain strong. But for the token to justify much higher valuations over the long term, the market has to believe that demand for XRP itself will rise. Not just demand for Ripple's brand, Ripple's technology, or XRP-related investment products. So where could XRP be in 5 years? Let's be honest and break this into scenarios. The bear case is that XRP remains relevant, but never truly becomes the dominant institutional settlement asset its biggest supporters hoped for. In that version, XRP could spend years trading somewhere between $1 and $2.50. It survives. It remains a major crypto asset. It keeps its community, but it does not deliver the huge breakout that long-term holders are waiting for. The base case is more constructive. In this version, XRP benefits from better regulation, steady ETF demand, Ripple's institutional relationships, and a stronger overall crypto market. It eventually reclaims the old all-time high and pushes beyond it, but not in some ridiculous overnight move. In that scenario, XRP could realistically trade somewhere between $3.50 and $6 over the next 5 years. That would be a major win, but still grounded in the size of the market and the amount of capital required. The bull case is where things get interesting. If XRP gets full retail excitement again, while also having institutional products, regulatory clarity, and real adoption narratives behind it, then the market could start treating XRP very differently. In that version, XRP could move into the $8 to $12 range. But that would require several things to line up at once. A strong crypto bull cycle, major ETF demand, stronger evidence of XRP utility, and retail returning with the same emotional force we saw in 2017. Then there is the extreme mania case. This is the version the XRP Army loves to talk about. $15? $20? Even higher. Is it impossible? In crypto, almost nothing is impossible during a mania phase. But it is not the base case. For XRP to reach those levels, it would need a massive combination of institutional money, retail mania, global liquidity, payment adoption, and narrative dominance. That is not something you assume. That is something you treat as the high-risk, high-reward scenario. My honest 5-year view is this. XRP is most realistically a $4 to $7 asset if the institutional story continues building and the wider crypto market goes through another serious expansion. That range would allow XRP to reclaim its old all-time high, reward long-term holders, and prove that the post-lawsuit era really did matter. But if XRP gets the one thing it has not had since 2018, full retail mania layered on top of institutional access, then $8 to $12 becomes possible. And that is what makes XRP so fascinating. It is not just a technology story. It is not just a legal story. It is not just a price story. It is a belief story. Retail built the legend. The SEC lawsuit hardened the Army. ETFs are now trying to institutionalize the asset. And the next 5 years will decide whether XRP was one of crypto's most misunderstood long-term winners, or one of the most powerful narratives that never fully became the global settlement revolution its believers expected. So the real question is not whether XRP has a fan base. It clearly does. The question is whether that fan base can now be joined by enough institutional capital, real-world utility, and fresh retail demand to push XRP into a new era. Because in 2018, retail alone sent XRP to $3.65. If the next cycle brings retail, ETFs, regulatory clarity, and genuine adoption at the same time, XRP could finally do something it has not done for years. Make the old all-time high look like the beginning of the story, not the end of it. As always, this is not financial advice. Crypto is volatile, predictions can be wrong, and XRP remains one of the most debated assets in the market. But whether you are bullish, bearish, or somewhere in the middle, XRP is impossible to ignore. Drop your thoughts in the comments. Tell me where you think XRP will be in 5 years. Check out the Kraken link in the description if you want to explore crypto through our official exchange partner. And as always, we'll see you at the top.